everybody, and thank you for watching the Wealth Guard Show. I'm your host, Tom White. Well, it was a strong week in the market as we entered into earnings season here with mixed results, mostly on the positive side. But it was still overshadowed once again by Congress. The spoilers of the party here as they still have not come to an agreement here about the budget. Anyway, that's a whole other story here. But for now, we're going to begin with our IBD 50 portfolio. And we look now to our holdings from this week. We got first place last week, Bridgepoint Education, starting out at $28.25. New Skin Enterprises came in second place last week, starting out at an even $40. Netflix came in third place at $286.93. Biogen survived the portfolio in the fourth spot last week for the third week in a row, $104 even, starting out the week now. Carbo Ceramics is the new addition to the portfolio. Picked up 14 shares of that stock at $172.59. We're carrying a total of $11,932.59 in this portfolio. Started out at $10,000. That puts us up just better than 19%. One of these stocks, the worst performer, is about to get sold. Let's see how we did. And our number one performer this week, coming in first place, it's Bridgepoint Education. And this was Alfonso's stock from a couple weeks back. It's still taking off. We got starting out the week at $28.25, closing the week at $30.50. Total gain of just under 8% this week, or $186.75. Let's take a look at the chart. And the chart of BPI still looks pretty strong. Down below 0.1, the stochastics, they're in overbought territory, but got another bullish signal here, and they're climbing higher. Gave this one a green mark. Above that, 0.2. MACDs, they're starting to take off again, and the histogram bars are on the rise, so we gave this one a green mark. And point number 3, up top, relative strength index. It's just in bullish territory now, starting to move a little higher, so we gave this one a green mark. It looks pretty good. And the number 2 performer this week, coming in second place, it's Carbo Ceramics. And it's the new addition to the portfolio. Started out the week at $172.59 and closing the week at an even $180. Total gain over just a bit better than 4.25%, or $103.74. Let's take a look at the chart. And on the chart of Carbo Ceramics, down below point number 1 there, the stochastics, they're still continuing higher. They look pretty strong. Gave this one a green mark. Above that, 0.2, MACDs, they're lifting higher, and the histogram bars are on the rise. We gave this one a green mark. And up top, relative strength index is trending higher too, so we gave this one a green mark. And the number 3 performer this week, coming in third place, it's Biogen. And Biogen started out the week at $104 even and closed the week at $105.56. Total gain of an even 1.5%, or $31.20. Let's take a look at the chart. And on the chart of Biogen, down below, point number 1, the stochastics, they were lifting higher, but now we're getting a little bearish signal here, but it's not decisive, so we gave this one a yellow mark. And above that, though, the MACDs, they're continuing bearish, and the histogram bars, they're dropping too, so we gave this one a red mark. And up top, the relative strength index, point number 3, is continuing on sideways, gave this one a yellow mark. And that only leaves room for one more stock in this portfolio. One of the stocks is going to remain, and the other is going to get sold. The first stock up, it's Netflix. Netflix was showing some signs of weakness last Friday. See how it did for this week. And the second stock up, it's New Skin Enterprises. New Skin Enterprises has been in the portfolio for only 2 weeks. Coming in number 4. And remaining in the portfolio, it's Nu Skin Enterprises. And Nu Skin Enterprises survives the portfolio and started out the week at $40 and closed the week at $40.40. Total of 1% gain, or $18. Let's take a look at the chart. And on a chart of Nu Skin Enterprises, down below, 0.1, the stochastics, they're in overbought territory here, and they're starting to look a little bearish. We gave this one a yellow mark. And above that, point number 2, the MACDs are converging on each other here, losing a little bit of steam, and the histogram bars are dropping a bit too, toward that zero line. Had to give this one a yellow mark. And up top, the relative strength index is continuing its sideways trend. We gave this one a yellow mark too. And so Netflix is out of here. And starting out the week at $286.93, we closed the week at $276.58. Total loss of 3.61%, or $103.50. Let's take a look at the chart. And on a chart of Netflix, we can see that the damage has continued from last week. Down below, 0.1, those stochastics are continuing lower, and they look real bearish. They're negative. We gave this one a red mark. Above that, point number 2, we got confirmation of those stochastics when those MACDs crossed. The black line crossed over the red, and they're continuing lower. Histogram bars fell below zero, and they're dropping too, so we gave this one a red mark. And up top, point number 3, relative strength index is falling too. It's not looking good up there, so we gave this one a red mark. And so we bought Netflix, 10 shares of that stock, back on June 24th. And we bought it for $256.96, and we sold it for $276.58. Total gain of $196.20, or 7.5%. We had a bigger gain in this stock earlier in the week, or earlier last week, I should say. We're up around $300 in this stock, and it sold off. That's why we sell these losers. We like to sell the losers and keep the winners, and we locked in a profit here, and we're out of the stock with a 7.5% gain in 1 month. Not bad. And our results this week: in first place, it was Bridgepoint Education, BPI, with an 8% gain, nearly an 8% gain. Watch out for this stock, though. After the close here on Friday, they issued Form 8K for SEC disclosure, and what they're doing is they're selling or reselling some shares of common stock, 35 million shares that were not out there trading in the street, but were still outstanding. So they're not diluting shareholder value, but they're definitely going to be flooding the street with more shares, if that makes sense. Anyway, watch out for that stock. We got Carbo Ceramics coming in second place with a 4.25% gain, roughly. And it's Biogen back on track, coming in third place, moving up from the 4th spot last week. Got a 1.5% gain in that stock. And it's Nu Skin Enterprises surviving the portfolio and knocking out Netflix with a 1% gain. Netflix is out of here with a 3.61% loss, but we profited on the stock nonetheless. We got a total gain here of $236.19 this week, or just a little bit better than 2%. And so we get a new stock in the portfolio. And this week, our new stock, it's Walt Energy. And Walt Energy, symbol WLT, has got a market cap about $8.2 billion. And has average daily volume about 2.3 million. Walt Energy produces and exports metallurgical coal for the steel industry, primarily in the United States. This is one to watch. This is interesting. It's been going up last week because the CEO is on the run. He was hired 3 months ago and took off. He resigned, and that's it for him. So they're speculating that this is going to be a takeover target. So do your homework if you're going to invest in this one. Let's take a look at the chart. And on the chart of Walt Energy, it looks like they're happy the CEO left. Down below, 0.1, the stochastics got a bullish signal, and it's raising higher here. Black line crossed over the red, we gave it a green mark. And 0.2 above that, we got confirmation as those MACDs are moving higher, and the histogram bars are jumping. We gave this one a green mark. And up top, point number 3, relative strength index is climbing higher. We gave this one a green mark too. It looks like they're happy without the CEO. And our holdings going into this week: in first place, it was Bridgepoint Education, starting out at $30.50. Carbo Ceramics came in second place, starting out at $180. We're going to watch this one as they got earnings released on Thursday. Hopefully we see some good things out of this one toward the end of the week. And in third place, it's Biogen, $105.56 starting out. And in fourth place, it's Nu Skin Enterprises, starting out at $40.40. Walt Energy is the new addition to the portfolio, starting out with 22 shares of that stock at $131.71. We're carrying cash $290.46, grand total $12,168.78. We started out on January 28th with only $10,000, and that puts us up just a little better than 21.5%. Well, you know, these stocks, they've got to perform or else. They're out of here. And we move now to our economic mechanics for this week, and for those of you who've been watching the show, you know that this portion is based upon three key principles. And first, the US dollar and the commodities move in the opposite direction, as commodities are priced in dollars, and commodities and interest rates move in the same direction. And high interest rates, 0.3, they're bearish for stocks. And as always, we begin with the US dollar. And on the daily chart of the US dollar, down below 0.1, the stochastics continued lower this week as they're bearish and moving into oversold territory. We gave this one a red mark. Above that, we got confirmation of the move in the stochastics and the MACDs as the black line crossed over the red and is continuing lower, and the histogram bars are dropping too, so we gave 0.2 a red mark. And up top, point number 3, the relative strength index is falling. It's trending lower, so we had to give this one a red mark too. And on the weekly chart of the US dollar, you can see things are starting to turn here. Down below, point number 1, the stochastics were bullish, but they've now crossed and given a bearish signal here, and they appear to be headed lower. We gave this one a red mark. Above that, point number 2 shows that the MACDs are losing some steam here, and the histogram bars are flattened, so we gave this one a yellow mark. Up top, point number 3, relative strength index, it's trending sideways. We gave this one a yellow mark too. And so, summing up the US dollar, we analyzed the daily chart and the weekly chart. And on the daily chart, we found the stochastics, the MACDs, and relative strength index were all bearish. We gave them red marks. And on the weekly chart, the stochastics were bearish, and they were starting to turn, so we gave that a red mark. MACDs and relative strength index have not confirmed that move yet, so we gave those yellow marks. And for a total, we got 4 red marks, 2 yellow marks, and 0 green marks for the US dollar. And so we look now at the commodities, represented by the CRB Index. And on the daily chart of the CRB Index, down below 0.1, you can see where we're slipping on those stochastics here, and they're starting to trend lower. We gave this one a yellow mark. Above that, point number 2 shows that the MACDs are still rising, but the histogram bars are falling, so we gave this one a yellow mark. And up top, point number 3, the relative strength index is trending sideways still, so we gave this one a yellow mark. And over on the weekly chart, down below point number 1, the stochastics look bullish here. We got the black line crossing over the red in oversold territory there, and it's looking strong. We gave this one a green mark. And above that, point number 2, we can see that the MACDs, they haven't confirmed the move yet, but they're looking to converge on each other here. And the histogram bars are moving up again toward that 0 line. We gave this one a yellow mark. And up top, point number 3, the relative strength index looks like it made a bottom here, and it's going to head a little, at least sideways or perhaps even higher, so we gave this one a yellow mark. And summing up the commodities, we analyzed daily chart and the weekly chart. On the daily chart, we found the stochastics, the MACDs, and the relative strength index were all neutral, and we gave them yellow marks. Over on the weekly chart, stochastics, they look bullish, they look strong, so we gave that one a green mark. MACD's relative strength index, they may want to confirm that move in the stochastics, but not yet. We gave those yellow marks. For a total, we got 0 red marks, 5 yellow marks, and 1 green mark. And now we look at the 10-year Treasury yield. And on the daily chart of the 10-year Treasury yield, down below, 0.1, the stochastics are looking bullish here as the black line crossed over the red in oversold territory. Want to see a bigger move over that 20 line, though, before we go green, but for now we're going to give this one a yellow mark. And above that, point number 2, we see that the MACDs, they're converging on each other here as the black line is getting ready to cross that red and confirm those stochastics. And the histogram bars are moving up again. They're looking stronger, so we give this one a yellow mark. And up top, point number 3, the relative strength index looks like it made a bottom here, and it's turning up higher, so we gave this one a yellow mark. I think this one may turn green here this week. We'll see on Monday. And over on the weekly chart, though, things don't look as good. Down below, 0.1, we just got a sell signal here in our stochastics. Black line crossed over the red, and they look like they're going to head lower here. We gave this one a red mark. Above that, 0.2, the MACDs, they're still going lower too, but the histogram bars have given a little lift here, so we gave this one a yellow mark. And up top, relative strength index, it's looking like it's heading sideways here, may want to turn up. We gave this one a yellow mark. And summing up the 10-year Treasury yield, we analyzed the daily chart and the weekly chart. And on the daily chart, things look like they're getting ready to turn, but for now, the stochastics, the MACDs, and the relative strength index were all neutral, so we gave them yellow marks. On the weekly chart, stochastics were negative, we gave them a red mark. MACDs and relative strength index were neutral, we gave those yellow marks. And for a total, we had 1 red mark, 5 yellow marks, and 0 green marks for the 10-year Treasury yield. I'm going to watch out on Monday here, because I think this one may get ready to turn and move up with the commodities. And now we look at the Dow Jones Industrial Average. And on the daily chart of the Dow Jones, down below, point number 1, the stochastics, they turn bullish here, and they're moving up into overbought territory, but they look still good here, so we give this one a green mark. And above that, point 2, we see we got a deflection here on those MACDs. The black line was converging on the red, but bounced off and is heading higher, and the histogram bars are moving up too, so we gave this one a green mark. And up top, point number 3, the relative strength index, looks like it made a bottom and it's going sideways, we gave it a yellow mark. And over on the weekly chart, things still looking strong here down below on point 1, the stochastics. They're not as bullish as they were last week, but they're still heading higher and they're positive. We gave them a green mark. And above that, point number 2, we can see that the MACDs are converging as the black line's moving in on that red, and the histogram bars are moving up on that 0 line. We gave this one a yellow mark. And up top, point number 3, relative strength index looks like it hit a bottom and it turned around. We gave this one a green mark. Coming up, the Dow Jones Industrial Average, we analyzed the daily chart and the weekly chart. On the daily chart, stochastics and MACDs were bullish and we gave them a green mark. Relative strength index was still neutral, so we gave that a yellow mark. Over on the weekly chart, stochastics were neutral. They were bullish, we gave them a green mark, but the MACDs were neutral and we gave that a yellow mark. Relative strength index was positive and we gave that a green mark. And for a total, we got 0 red marks, 2 yellow marks, and 4 green marks for the Dow Jones. It's nice entering into earnings season here. And so we've been coming up with scores for the US dollar, the commodities, the 10-year Treasury yield, and the Dow Jones, looking for where the strengths are and where the weaknesses lie. We did that by weighing the number of positives against the number of negatives and coming to a conclusion that way. And this week, in first place, it was clearly the Dow Jones Industrial Average, as things were looking pretty good. 4 green marks, 2 yellow marks, and 0 red marks. And in second place, it was the commodities, the CRB Index down there. Got 1 green mark, 5 yellow marks, and 0 red marks. Third place, it was the 10-year Treasury yield. We had 0 green marks, 5 yellow marks, and 1 red mark. I expect this one to turn around and head up toward the commodities as they move in the same direction. Hoping it's not the other way around, because I think the commodities are looking pretty good here. US dollar came in last place, and it looks weak. Got 4 red marks with 2 yellow marks and 0 green marks there, and things are looking real weak on US dollar going into Monday. And we look now at the market gauge. The object here is to be as far in the right column in bullish territory as possible and as far away from the left column in bearish territory as possible. This week, first place was Dow Jones Industrial Average. We could see that moving into bullish territory. It's leaving that neutral ground and it's looking bullish. And in second place, it was the CRB Index, the commodities. They're starting to move into bullish territory, but they're still trapped in neutral. And it's the 10-year Treasury yield right behind that, and they're looking like they're getting out of the bearish territory here as interest rates look like they may be moving up a little bit higher here. And they're moving into the neutral ground here following the commodities. And the US dollar is in last place, heading lower and looking like it's going to go all the way into the bearish column this week. And that makes sense as that moves in the opposite direction as the commodities. And of course the commodities, the 10-year Treasury yields move in the same direction. I expect the 10-year Treasury to move further into the neutral bullish territory this coming week. Well, that's all from our show this week. Tune in again next week when we'll do it again. Feel free to give a call for personal education anywhere, $90 per hour. Call 303-818-7807 and we can get together. Keep in mind, I don't sell anything. I am not in that business any longer. I teach you how to fish so you can eat for a lifetime. But for now, I'm out of here.